Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, and as always, thanks for having me.
Tim, in your June 19th newsletter, you talked about the possibility that commodities have peaked. Well, have they?
Well, I think so. So far, so good. You know, the evidence tends to, or continues to mount in that favor, I should say. You know, I saw evidence on the Baltic Dry Index earlier in the year, in the first quarter. And then, you know, that was a kind of a leading indicator to me in the work that I do with the cycles. And then that bled over into some other areas. And then finally, the CRB, and we saw some evidence, you know, some weakness, and now evidence with crude oil and some of the other commodities. So, yes, as unpopular as the comment was to make, I saw this really starting to come together in late May, wrote about it, as you said, in the June letter, and so far that evidence continues to mount. So, yeah, it looks like it at this point, yes.
The Baltic Dry Index, for people who may not know, what is it?
Well, it's a shipping index. I don't remember the specific definition. I've read it, but I can't quote it to you. But it is as I look at it, it is a leading indicator of commodities, and it has a similar cyclical rhythm with the CRB and other commodities, oil in particular. And so sometimes it'll lead a little bit, sometimes it'll lag a little bit, but it is a proxy, is a better way of saying it, of the overall commodity complex. And in this case, I saw evidence that it had peaked back in the first quarter. And, you know, it's proven itself again. The official definition, I don't have it in front of me and I can't remember, but it is basically a shipping index.
How much stuff is being shipped where? Exactly.
I don't know.
Yeah, we don't know, but we just know that it tracks, you know, all of our bulk containers and what they're carrying and where they're carrying it, and the prices.
And from my perspective, I'm looking at the cycles, right? And I don't really care what the makeup of it is, right?
And just anecdotally here, I live in a port city, and I would say half the time in front of me, usually there's 3 or 4 container ships. You can go days and not see any, and yet we're saying there's still supply shortages. Obviously, stuff isn't being shipped, or those ships aren't moving, or there isn't a demand for it because they're just not parked here.
Well, and I understand it's a dilemma in my mind as well. You know, how can commodities be peaking when we're seeing the supply chain shortages that we're seeing? And we are seeing those shortages. There's no question about that. I mean, you see it in everything from, you know, I kind of watch it. I just, for fun, I like to, you know, I go somewhere and I look, and, you know, I was in PetSmart last week and I was noticing, not that I needed one, but I was just kind of cruising up and down the aisles looking. And I noticed that there were some bare spots with the dog food. There were some, they had very little, in way of dog collars. What's up with dog collars? But they didn't have dog collars. Dog leashes were skimpy. And, I don't remember, you know, some of the other stuff. I remember they had plenty of dog beds, but it's just like it's weird stuff that's just not there. Parts. I was in one of the local parts stores, automotive parts stores, and they're having issues with oil. And he went through, you know, some other things, you know, that they don't have. And he said daily, it's something new. I asked the guy, I said, well, is it getting any better? And he said, it's like it's not necessarily getting any better, but it's not getting any worse. It's just different. He said every day there's something different they can't get. And right now it's diesel oils and motor oils in general. He said, go look at the aisle. So I did. And anyway, that said, I mean, I understand the conflict. How can you say commodities are peaking with that kind of thing going on. But, I wrote about it. I saw it beginning to develop really good in May, and then wrote about it in the June letter. And, oil is down. I saw crude oil down around 92, 93 today. It's bounced off those lows, but it continues to crack. Gold is down good. Even wheat, some of the grains are down. So, yeah, I think commodities are peaking. How you reconcile the dilemma with the supply chain shortages and what I'm seeing in the charts, I don't know. I see the same thing, but the evidence is there that we've possibly turned the corner.
In a situation like this, do you think it's enough to cool inflation, or has inflation just taken off on its own and is its own beast?
I think in part, I think this inflation, I've also talked about this in the letter. I don't think it's, yes, there's an element of monetary aspect to it, but I think by and large, this whole inflationary round has been, a function of the supply chain shortages, higher fuel prices, et cetera, et cetera. And so I don't think it's as monetary as people believe. And, I talk about that and explain that in the research letter. In one aspect of that is the dollar. This is the highest advancing 3-year cycle in the CRB in history, yet the dollar has gone up with it. And typically the dollar moves in the opposite direction with the 3-year cycle advance in commodities, and this time they've gone up together. So that pretty much in and of itself proves that this is not really monetary. It's more of a supply chain driven phenomenon. And again, that's in direct conflict. I acknowledge it. That's in direct conflict with the fact that we're seeing the shortages, but it also looks like commodity prices are peaking. So as I piece those pieces together, what I'm seeing is that, the economy is just shriveling up. It's a dying economy. The solution, like someone said, is for higher oil prices is higher oil prices. It gets to the point where it just can't be supported, and maybe that's where we're at. Maybe that's what we're seeing.
Sure, you can't afford to drive, so maybe you have to go to work, but you're going to make sure you include a lot of other chores along with it. You're not going to make separate trips for dog food, milk, and eggs, and maybe a new lawn chair. Right.
The frivolous driving comes to a halt. Exactly.
Also, it's so much cheaper when you have Amazon Prime. Why should I, spend money driving when they'll deliver for free?
Right.
Or it's not really free. You're paying a fee up front, so you've just covered it up there. We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, as we speak, stock markets across North America again down. The price of gold down quite a bit. Crude down. What kind of a message are we receiving right now from all these different various markets?
That it's a process and it's all underway, I believe. I said I thought that all asset prices would go down together. Something else that we talked about, like I said, it's a process. It's a slow process, but it's a process and it's underway. And you may not recall, but we talked about lumber last year and the fact that, I thought that it had peaked and then before we could do the next interview, it had really started to get hit. We saw a rebound. I believe I'm not looking at a chart, but as I remember, it was out of the March low this year, and then it's since turned down pretty heavily. And then Bitcoin, we talked about Bitcoin as an example that all asset prices would peak together, and I think we talked about that maybe in November, and I thought it had peaked, and of course it has. Obviously, it's way off of its highs. I forget the percentage down, but it's huge. And so now we're seeing it in commodities, and we're seeing some weakness in equities. And I think this is all a warning that, just like I said, all asset prices I think are going to ultimately go down together, and it's a slow process, but it's happening. The one thing that is not turned yet that I expect will is interest rates. So that's another thing I'm watching. I know everybody thinks interest rates are going higher, and I'm not saying they're not in the short term. I mean, short-term rates are up again today. I think the longer end the longer bonds may be bottoming, which means that the longer end, the rates on the longer end may be peaking. The short end, I'm not sure that we're there yet. I don't think we are. But that's another piece of the puzzle. But it's all coming together, and when it does, I think it's going to be one hell of a show, because this is, how do you keep this bubble from becoming unraveled at this point? And I think that's what we're seeing, is this ginormous top in the making.
The Bank of Canada hasn't hiked interest rates by 1% for 20 years, but they did it on Wednesday. Do you expect the Fed to make a similar semi-shocking hike of maybe 1% instead of a percentage of a percent?
Yeah, I think they're going to, there's a dilemma there too. Let me explain. And I cover this again, the details. It started in the March letter, but in February I saw a phenomena that I've never seen before. And that is, there's a marker based on the Fed model that is, it marks the beginning of the end of a rate hiking cycle. Or in some cases it's the end of the rate hiking cycle, but at minimum it's the beginning of the end of the rate hiking cycle. In other words, it sets the precedence. And that happened in February. And then, like I said, I cover the details, start covering it in March. And so on the one hand, this is telling us we're at the beginning of the end of the rate hiking cycle. On the other hand, they're raising rates. And so the conflict there's not really a conflict there. The conflict is like I said, we're at the beginning of the end, and they are making some raises. But what's really odd about this is that typically, listen to what I said. I said it marks the beginning of the end, or the end of a rate hiking cycle. This happened before the rate hiking cycle even begun. So that's very, very odd. I'm not sure entirely of the message it's sending. I think I do think it's meaningful, and I do think that what it means is that we are at the beginning of the end of this rate hiking cycle. But for it to occur at the bottom of a cycle instead of at the top is very strange. I do think there's a message there, and the message there, I think, is it's a signal of the deflationary forces. And I think what we're going to see is that when we get to the top of this rate hiking cycle, which we're not there, I fully expect another hike. Depending on where we are on the short end at the time of the Fed meeting, I could see 3/4 or maybe even a point. I think certainly a 50-point basis hike is in the bag, but maybe 3/4 or a whole point. But I still say at the same time, we're nearing the end of this rate hiking cycle, and when interest rates turn down, I think that's going to be a game changer. I think that's when the economy is really going to be in trouble.
Are U.S. airports crammed to the gills because they don't have enough security workers?
I have no idea. I stay as far away from a U.S. airport as I can.
I know. You love your motor.
I can't remember the last time I was in a U.S. airport.
So we're seeing weakness with gold. Crude prices have come down. The the Royal Bank of Canada, the largest in this country, predicting a recession, but they say it'll be very mild. Do you think that's just propaganda from the bank?
Yeah, I think it's trying to keep the cattle calm. Like I said, as I see it, it's a process, and the process has been slow in the making. We started seeing asset classes peaking last year. Started with lumber, Bitcoin, et cetera, and like I said, the process is underway. Now we're seeing it with we've got the weakness in equities. I think equities have peaked in my world, a 4-year cycle top, and one by one the dominoes are falling, and the next thing we need to see is a top in short-term interest rates.
Canada and the U.S. still reporting labor shortages, but it's mostly for high-skilled jobs.
I've seen some stuff. I don't know. That's not something that I'm following specifically, but I have seen some stuff where the disabilities in the U.S. are up, and the speculation is it's from, who knows what it's from, but either some kind of COVID vaccine related, whatever, but disability claims are up. And so I'm sure that is impacting, labor as well. And if disability claims are up in the U.S., I would think they're probably up in Canada as well. Why would you guys be any different in that regard?
Last reported 11 million job vacancies in the U.S., 1 million in Canada. But yet people are being warned, if there's a recession, be very careful if you're just getting a new job to get a slight pay raise. That could backfire, because usually the slogan is last hired, first fired.
Right. I agree. No, I think the economy is in trouble. And I think what we're seeing here is a hopeful rally or a hopeful comeback, but I think it's a mirage. Like I said, I think the process is well underway.
Mm-hmm. Now, it would be about a year ago when I suggested that if we do see a downturn on the market, it's not going to be a collapse overnight. It's going to be a step down. It's going to step down a little bit, bounce up, but not quite as high as it was before. Is that the process that we're seeing this time around? Not a crash, but a step down decline.
That's the process we've seen so far. So far, it's the frog boiling in the pot. You know, as they say, it's been slow, methodical, orderly. I don't know that I believe that will continue to be the case, but so far that is the case. I don't think, I think people are still hopeful that this hasn't turned. You know, the cattle aren't alarmed yet. Stampede hasn't begun, but I think ultimately that will prove to be the case.
Tim, any final thoughts before we wrap up?
No, that's pretty much it. Again, not to sound like a salesman, I don't mean it that way, but I know I'm saying some contrary things, with commodities and that sort of thing. But the research is available. The data is there. The data is what the data is, and anyone interested, they can find it in those research letters with a subscription, of course.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.